What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. I do not offer an investment trading program. I do not endorse anybody contacting you via the comment section about an investment trading program. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least one pin in that account. They're going to give you up to 12 free stocks for just trying out their brokerage app. I use Webull's brokerage app every day, and I'm happy with it, guys. So if you're interested in that offer, there's a link down in the description box of the video. Go click on that Webull link, open up your new brokerage account today, go get that free stock, go get that free money. We have two dates we have to be concerned about in the month of December, guys. The first one is December 13th. That's when the November CPI report comes out. And then December 14th is when the Federal Reserve will meet and determine if they're going to increase short-term interest rates by 50 basis points, 75 basis points, 100 basis points, or 0 basis points. So those two dates are going to be critical because what the CPI report says will determine what the Fed does on that next day, December 14th, whether they increase that short-term interest rate or not. And that directly affects us as investors. Why? Because if the CPI report comes back and says inflation has continued to come down for the second month in a row, then the Fed will probably not increase short-term interest rates more than 50 basis points. And then that in turn will tell investors inflation is starting to consistently come down, which then they will flood to the stock market to buy paper assets, which in turn will rally the stock market. So that would be good news if the CPI report says inflation is coming down still second month in a row, right? If the CPI report says, nah, inflation U-turned from October, and in November, it actually went back up again, then that will tell the Federal Reserve that we got to continue aggressively increasing interest rates in order to combat and fight inflation. And that will mean we'll probably get a 75 basis point rate hike or higher. 67% of investors believe that we'll get only a 50 basis point rate hike. About 35% of investors believe we'll get a 75 basis point rate hike. So you can tell the market itself is anticipating only a 50 basis point rate hike, which in turn should give us a nice little rally if that's what we get. But we won't know until we get that CPI report, like I said, which is due December 13th. That's going to be critical, right? Very, very critical to what happens for the remainder of December and going into the first quarter of 2023, because this will be the last Fed meeting for 2022 on December 14th. The next meeting is going to be in February 2023. So yeah, it's going to be a pretty important day on December 13th and 14th when we get those two pieces of information. It will directly impact us as investors if we got a long-term outlook, like I've been asking you guys to consider as it relates to investing in the stock market and buying paper assets. Either way, we still continue doing what we've set out to do 8 months ago, right? Or at the beginning of this year. Our goal was to do what? Buy paper assets at a discount consistently and hold them 3 to 5 years until we could really realize a net worth gain, right? That's really the strategy. So great if inflation is still coming down, but at the end of the day, if it's not coming down, I'm still going to put myself in a position to be buying my favorite companies, my favorite ETFs, and my favorite index funds through dollar cost averaging. And honestly, I don't want our economy to be in trouble. Right now, it appears to be in trouble because inflation is 7.7%. And really, to have a healthy economy, according to the Federal Reserve, we need to be at 2%. So right now, we're in a recession, in my opinion, although technically the Federal Reserve has not called it a recession. I think we are in one, right? I think we are already in one. But again, that's not a bad thing from an investor standpoint, because as investors, especially in paper assets, we want to be able to continue buying these assets cheap as we can get them. So as discounted as we can get them, because we know in next 3 to 5 years, when the next bull market begins, that's when those assets are going to really skyrocket and we're going to see a net worth gain. And again, don't want the economy to be, in a bad, deep recession, because that's not good for any of us. But I want to be able to continue to buy these blue chip assets, these paper assets, while I can over the next, year, because I think in 2023, we're going to get bumpy. It's going to be choppy in 2023, right? Because although inflation may be showing some signs of coming down, the labor market is still showing signs of getting stronger. So we know we have to have a softer labor market in order to achieve our goal of getting inflation down to 2%, because the more money we make in our country, in America, the more money we spend. So if people are continuing to get raises, and why would they stop spending? They probably wouldn't. People stop spending when what? Money gets too expensive to borrow so that they can spend, or if their wages get cut or they get laid off. That's when people stop spending. But if they're continuing to get raises, it's going to be tough for inflation to come all the way down to the 2%, is what I'm saying. I think we'll get there, but it's going to be a long road to get there, guys. We probably won't get there until sometime in late 2024, 2025. Companies are not going to be able to grow and expand and be more profitable until interest rates come down. That's the only way companies can borrow money cheaply, guys, is when interest rates come down and they're low enough where they can borrow money and then take that money, invest it in their growth, and then get a return on that growth and be able to pay back the money that they borrow, but still have a profit. Right now, they can't do that because money is too expensive to borrow, right? So they're not growing. And then when companies are not growing, guess what? The stock market's not growing. Paper assets are not growing. 2024, 2025, we will see inflation down, like I said, in that 3%, hopefully 2% range, but definitely 3% range. And we will see interest rates, short-term interest rates, come down significantly as well, along with inflation. And that's when I think we will see the stock market boom again and go into that bull market phase again. And that's when all these investments we picked up over the last couple of years, guys, will go up in value. But I'm curious to know what you think about December 13th CPI report coming out for November. What do you think it's going to say? Do you believe inflation will be going up, or will it be coming down? And then I want you to think about and drop me some comments on what do you believe the Federal Reserve will do on the 14th when it's time to announce the new rate hike. Would it be 50 basis points, 75 basis points? Love to get your comments on that, guys. Again, if you want those 12 free stocks from Webull, there's a link down in the description box, guys. Go click on that Webull link, open up that new account today, go get that free stock, go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.